Hey, George Surrey's mortgage broker. Let's get into it. This is April 2023. Property downturn pauses. So, not surprising, we've had a little bit of a pause in the property downturn. When you think about it, there's only two things that are really pushing the property market down. And that is, we've just had a huge run of property prices over the pandemic. So, obviously, they're pretty inflated at the moment. And secondly, we've had just 10 months of interest rate rises. So these two things are pushing down the market. And there's a potential, Tuesday there's going to be another RBA meeting. We'll see what happens there. There's potential for the interest rates to continue to go up. That's all downward pressure. However, everything else is holding the property market up. We've got a lot of overseas migrants coming into Australia. We've got a rental crisis. We've got a lack of supply. We've got the construction industry on its knees at the moment. All these things are holding up prices. So not surprising we've had a bit of a pause there. There's more things to come. There could be interest rate rises. Like I said, a lot of people are coming off their fixed interest rates. Let's see where this heads. Okay, so next Tuesday, I'll send out an email. I'll let you know how the interest rates went with the RBA board meeting.
Refinancing. There's no surprise that there's so much refinance activity happening at the moment. And that's because so many people are stuck on these high rates and they need to refinance. So this is a call out. If you know any family, friends, anyone at all who's looking at refinancing, send them through to me because I can help them out. Now, when it comes to current clients, a lot of them are also asking me, should I refinance? Now, there's a general rule of thumb, and the answer is it depends where you are in your loan cycle. So if you've had your home loan for less than 2 years, 6 months, a year and a half, something like that, you probably don't want to refinance as a general rule. And there's a reason for that. And that is you have a credit score. So every time you refinance, every time you apply for a credit card, you have these things called credit inquiries, which goes on your credit report. And if you get too many of them, it hurts your credit score. So what you do not want to be doing is every 6 months you see a shiny rate and you go, right, I'm going to refinance. That's very bad because after a while you do that enough, the banks won't want to deal with you anymore. It's very important to protect this score. And that's why, as a general rule of thumb, I do not change people from bank to bank, too much because it's not going to be good for them. So what do you do instead? Well, firstly, you talk to me because I might be able to get you a rate review with the bank. Now, if that doesn't work, there's a next step, which is you talk to your bank, you pretend you're going to refinance, you're actually not going to refinance, but you pretend you're going to, and you ask to see if they can give you a better deal. So that's the general strategy to this. You don't want to be refinancing all the time. However, if you've had your home loan for 2, 3, 4 years, maybe you can look at refinancing. It's a case-by-case basis. We don't want to get in the habit of just looking at shiny rates. We want to try and get something that's going to work for the longer term. But in those cases, I always do a health review, financial health review, every 2 years for my clients anyway. But I'm here to help you. So if you're thinking about refinancing, contact me. If you have friends, family, anyone that's thinking about refinancing, contact me. So end of story, contact me. So ATO is really cracking down on investment properties at the moment. So you have to really watch yourself there. I used to be a financial tax agent. So even though I can't give advice, I'm not a financial tax agent anymore. I do take into account all the tax things when I'm doing your loans. So for example, if I've got a client and they're getting a home loan for an owner-occupier, I'm thinking, what happens if they turn that into an investment property in the future and they buy another owner-occupier? How can we get this to be the most tax efficient and advantageous for them as possible? So I'm keeping this, I don't bore you with all the details, but this goes through my head when I'm doing a loan for you. So, but when you do, want actual advice, you got to talk to an accountant, and there's a number of dot points here, which will be very beneficial for you. Just make sure you're compliant, make sure you're doing everything above board because they really are focusing on that this year. Make sure that if you've got an investment property, make sure you're claiming expenses, the interest for the investment property, not for own occupied portions of the loan, all that type of stuff. Your accountant will be able to advise on that. This is going to be a very short one. There's not too much happening this month. Let's see what happens Tuesday. Interest rate rise. I'll send you out an email to let you know the results there. But please feel free to contact me, engage with me, and thank you for being clients.